What goes up must come down. I could be talking about inflation, or I could be talking about real estate sales, or maybe I'm talking about the interest rates. I'll cover all that and take your questions as always right here, right now on Live at Lunch. Thank you so much for joining me. I'm Lambros Demos on this beautiful sunny Wednesday afternoon. Hey, Josh, thanks for joining me, and everyone else joining as well. So, fun times for real estate or not. Man, the sales are down like I've never seen them before. Even lower than last year, and last year was a slow time. So it's interesting. I mean, I'll get to that in a second, but first I want to talk about the inflation rate, which came down yesterday, down to 2.5% year over year. Okay, that's down from 2.7% in June. So that's going in the right direction for people. But I want to clarify something because maybe there's a little bit of confusion out there, not from my followers, because I know you guys are smart and you understand how inflation works. But when the announcement came out yesterday for inflation, I was reading some other posts from other people announcing, like everybody, every realtor and their dog was posting about the inflation rate yesterday. And it was funny to read some of the comments because a lot of people were saying fake news. And I remember one comment in particular said, bullshit, why are things still expensive? So maybe they don't have an understanding exactly of what inflation is. Basically, just because inflation comes down month over month doesn't mean prices are coming down. Okay, inflation always means prices are going up. So, and if the inflation rate comes down, it just means prices aren't going up at the same rate as they were going up previously. So picture it as a runner. Okay, so let's say I'm running a marathon and I'm chugging along, and then I get tired, so I slow down my pace. I'm still moving forward. Okay, so prices are still moving up. Prices are still moving forward. I'm just not moving as quickly as I was before. So same thing with inflation. It's not moving, prices aren't moving as higher as they were before, but they're still going up. Okay, so that's on inflation. If prices were coming down, that would be called deflation. Okay, so I know all my followers understand this, of course, but just for the sake of some other people that may be tuning in, that's basically what's going on here. So, so it has come down month over month, which is a good sign for our pockets. But it's also a good sign for the Bank of Canada because they're keeping an eye on the inflation rate and they're taking a lot of credit for bringing the inflation down. So let's give them the credit and hope that they continue to cut interest rates. The next interest rate announcement is due on September the 4th, which is a couple of weeks from today. And at first I thought it would be 50-50, but now I'm leaning towards another rate cut. And I'll explain why in a minute if we go through the whole inflation thing here. So as I mentioned, it's down to 2.5%. That's the lowest it's been since March of 2021. So over 3 years, it's coming down. And particularly from things like travel tours, passenger vehicles, and electricity are the ones bringing inflation down. The travel tours thing is interesting. That includes like, flights, hotel accommodations, the whole enchilada, right? So, but only because 2023, if you recall, was the first full year, full summer that we had without any COVID restrictions. In 2022, I think there were still some COVID restrictions. So people were, pent up, trying to, desperate to go and travel. So I think there was a bit of a boom in traveling last summer. So that kind of elevated the prices a little bit. So now compared to that, things are coming down. So that makes a lot of sense. As well, what drove prices higher? So what's keeping inflation high? Any guesses? I'll give you some guesses. You can post your comments here. If you have any questions, by all means as well, you can post them here and I'll try to answer them while I'm live. because you never know who else watching has the same questions. And I'm sure there's a lot of people out there that do have the same questions. So feel free, don't be shy, post it here or any comments you have. If you agree with me as well, feel free to give me a like. I'm all about the engagement here. So again, to my question. So we know that travel tours and passenger vehicles and electricity brought the inflation rate down. But what do you think brought it up? What's keeping it at 2.5% as opposed to bringing it down to maybe 2% or less? If you said shelter costs, you'd be bang on, or mortgage interest, part of shelter costs, rent, all that stuff is keeping the inflation up at 2.5%. Without that, I'm sure it would be below 2% even, because shelter was the largest, I guess, component that pushed the inflation higher. It came in at 5.7%. Okay, everything else was down around the 2.5% or maybe less, etc. But shelter costs were up at 5.7%. And contributing to that high shelter cost, I mentioned it earlier, was mortgage interest, which contributed 21% year over year. Okay, so that's how much mortgage interest costs went up year over year, which is easily the highest component out of anything, right? Everything else is in single digits. Even the other things that brought things up, like rent, 8.5%, food from restaurants, 3.8%, passenger vehicle insurance premiums went up just under 10% and 9.6%, and property taxes, 4.9%. So everything else is in single digits. Mortgage interest, comes in at 21% year over year. So, and that's contributing to the high shelter costs. On the flip side of that, bringing inflation down is telephone services at minus 7%. Again, passenger vehicles, as I mentioned before, negative 1.4%. Digital computing equipment and devices down 9.4%. Travel tours down 2.8%, etc. So back to the mortgage interest cost. And the reason I bring this up is because it's directly tied, obviously, to the Bank of Canada's interest rate announcement. So I hope they're seeing the same data that we're seeing here, and they see that mortgage interest is far and away the largest component that's keeping inflation up, and hopefully they'll continue to do something about it. They've cut rates in June, they've cut rates in July, bringing the overnight rate, or the policy rate, whatever you want to call it, from 5% down to 4.5%. Next announcement is September 4th, and I'm predicting that we will see another rate cut on September the 4th, bringing it down to 4.25%. So it's going to be another quarter point cut, in my opinion. Again, I might be wrong, who knows, but a lot of economists out there are predicting the same thing. And judging from what I'm seeing here, number one, inflation has come down again, so they're keeping their eye on inflation. The biggest contributor to inflation is mortgage interest cost. And the third thing that Bank of Canada also looks at is the unemployment rate, which did not change month over month. It's still at 6.4%, which is the highest it's been since COVID first started, pretty much. So it started the year off, I believe, at 5.9%, and then went up to 6.1, 6.2, and then jumped to 6.4% in June, where it remained in July. So the Bank of Canada looks at that as well, and they see that people are losing their jobs, and that's what they wanted to see, unfortunately, in order for them to start cutting interest rates. So I think they will cut interest rates again in September, and we'll talk about that when it happens. That's that in a nutshell. If you have any questions about that, feel free to ask them here while I'm live. If you're watching this on the replay, you can still ask your questions, and I'll get to it as soon as I can. If it's something that you would rather ask in private, that's fine. You can send me a personal message or a direct message, and I'm happy to answer it there. So moving on to the real estate stats. I mentioned off the top that real estate sales are down as well. So inflation's down. Real estate sales are down. Even listings are down. Okay, but let's keep this in context. We're in August, okay, and August is traditionally the slowest month for real estate listings and sales. August and December, it's a fight to the bottom there. But August is always slow. I mean, people are on vacation. Those who wanted to buy, if they have kids, they want to get the kids settled in school, have already bought. They bought in the spring and probably closed over July. Now they're going on vacation, everything's settled. So when they come back, from vacation, et cetera, et cetera. So it's a very slow time for real estate sales in August, and no surprise this year as well. Things are down. Listings, for example, in Toronto are down 31%, and in Mississauga, they're down 9%. Sales as well in Toronto are down 18%, which is a lesser drop than listings, which effectively tightens the market a little bit, but it's not going to make much difference, especially this is only over the first 3 weeks or so of August. Today's August 21st. I'm only counting the first 20 days of August and comparing them to the first 20 days of July. So these numbers could certainly change by the end of the month. I don't think they're going to improve much, so this is probably a good sign of what we're going to see for the whole month. Not Mississauga, I meant Peel Region. So in Peel Region, we saw listings come down 9%, but we also saw sales volume come down 9%. So that's pretty even. Fewer listings, fewer sales, less supply, fewer sales. So that's no surprise there. Showings are interesting. They came down 11% in Toronto, but they actually went up 5% in Peel Region. Despite inventory coming down 9%, we saw an increase of showing activity up 5%. But I'm going to take that with a grain of salt, because when you look at the calendar, you'll see the first 20 days of July had one less Sunday than the first 20 days of August. And Sundays are a very busy day for people going out to looking at properties, right? So if you take that day away, and then also consider Canada Day, which a lot of people might have been away, et cetera. So there's probably those 2 days factor in there as well, that maybe it's skewed a little bit. And that's why it appears that showing activity is up in the first 20 days of August. But I would take it with a grain of salt. Like I said, we'll know better at the end of the month whether this is true or not. But I just wanted to throw that out there for you. Offers are down in Toronto 15% and about 11% in Peel Region. And things are taking a bit longer to sell these days. In Toronto, they're taking about 5 days longer, and in Peel Region, they're taking about 2 days longer to sell. So, but all this might, well, I'm not going to say it's going to change, it's going to do a 180, but things may certainly pick up in the fall. They tend to pick up after Labor Day. As I said, August is traditionally the lowest or the slowest month of the year for real estate sales. September tends to pick up. So about mid-September, things start picking up. And then October is usually strong. November is, also pretty good, but then at the end of November into December, things slow down again. So we have a bit of a mini surge in the fall as well. So I'm expecting to see that, especially if we get another interest rate cut on September the 4th. That's going to be 3 cuts in a row, and that should motivate some buyers to get back into the market. But we'll see what happens. I mean, unaffordability is still an issue. Prices are still high. They haven't come down yet. Not sure if and when they will come down. As interest rates come down, then that allows people to get qualified to purchase a home. So the competition should certainly go up as well. And when there's more competition, that keeps prices up. So we'll see what happens. The only way prices are going to come down is if there's a flood of inventory hitting the market at the same time. All these sellers want to sell at the same time, but I can't see that happening. Yes, mortgage renewals are a factor, and we've got about 52% of mortgages coming due, next year in 2025. But by that time, I think interest rates will have come down significantly. That will allow people to requalify and re-up their mortgages higher, obviously, than the first term that they had, but it should still be okay because it's within the stress test limit. And the stress test, if you're not aware, you had to qualify at 2 points higher than what your actual mortgage was. And by next year, hopefully that number is within that 2 percentage points higher that people qualified for. So theoretically, they should qualify for mortgages upon renewal next year. That's my theory, and I'm sticking to it. All right. Okay. If there are any questions, I will take them now. Otherwise, I will let you go to enjoy this beautiful day. And I'll probably miss next week, so I'll see you in a couple weeks. Ciao, everybody. Have a great day.